This is Horizon's Middle East and Africa. Our top stories this morning. U.S. Treasury Secretary Scott Bessent tells Bloomberg that sanctions relief for Russia could be on the table in talks to end the war in Ukraine. The South African president urges G20 nations to set aside their differences and focus on tackling the world's most pressing challenges. Cyril Ramaphosa also downplaying a rift with the US at the opening of the foreign ministers' meeting. And Alibaba's shares surging in Hong Kong as the Chinese tech giant is able to impress investors with even the highest expectations about its AI business. Well, it's just gone 8 a.m. across the Emirates. It's 3 p.m. Friday afternoon here in Sydney. I'm Paul Allen in for Jemana Beseche. Let's take a look at some of the regular assets that we track. We're seeing yields on the 10-year creeping back a little, 448.97 at the moment. We did hear some remarks also from the Treasury Secretary Scott Bessent saying, well, all of President Trump's policies are disinflationary, which rather pushes back on some of the Fed rhetoric that we've heard in terms of waiting back and seeing on the impact on inflation of some of those policies. We heard from Alberto Mussolini saying, saying the increased risk of inflation could stall above 2% should policy remain restrictive. So the yield not moving a great deal there at the moment. We've got crude hanging on to gain 76.46 for Brent at the moment. It is heading, though, for its biggest weekly gain since early January, mainly on supply uncertainty. And gold just backing away from the record that it set on Thursday. Still up about 2% this week, though, on haven demand and heading for its 8th consecutive weekly advance. All right, let's check in on how markets in Asia are faring. Avril Hong's in our Singapore studio. Avril.
Yeah, Paul, we're seeing the market focus today on two things, right? Alibaba earnings, because this is what investors are watching for. Does that DeepSeek AI rally have legs? And Alibaba delivered via a beat when it comes to both its e-commerce and cloud businesses. Cloud is, of course, where it houses its AI products. So doing well, the stock opened 10% higher. And then in the past hour or so, it revved up in terms of gains, accelerating. You're adding about $38 billion in terms of market cap to the price of the stock, and its earnings also raising optimism for other Chinese tech names. So Hang Seng Tech also, I think, the highest level since early 2022, if I'm not wrong. The other thing that we were watching in markets today was the dollar-yen move. So overnight, we saw it dip below the 150 level. Now it's back up above that again after BOJ's Ueda sounded a bit dovish, saying that they will respond nimbly to a sharp rise in yields. Dollar-yen at around the 150.3 handle. Paul.
All right, Avril Hong in Singapore, thank you. Well, the US has signalled that sanctions relief for Russia could be on the table in talks over the war in Ukraine. Treasury Secretary Scott Bessent told Bloomberg that Washington is prepared to either ramp up or take down penalties based on the Kremlin's willingness to negotiate. Bessent also criticised Ukrainian President Volodymyr Zelensky for suggesting President Trump is misinformed about the war.
A lot of his remarks in Munich I thought were inappropriate. President Zelensky, when I met with him, assured me that he'd be signing the minerals deal in Munich. He has not. And look, the real purpose here, and I think it's turned into kind of this media circus, that President Trump had a very elegant plan.
Let's bring in Bloomberg senior reporter Henry Meyer in Dubai. So, Henry, will that sanctions threat play a role in the progress of the talks here?
Yes, Paul. I mean, I think this is the most explicit that the US has been that it's wielding sanctions in this process. So here you have a situation in which, Putin and Trump are beginning this dialogue on Ukraine. And there's a carrot and stick approach. I mean, this has long been what has been reported the Trump administration would adopt, and we see that it is actually now happening. And it remains to be seen what kind of sanctions relief are going to be on the table, which could persuade Putin to make the concessions that he will have to make if he's going to make a deal with Trump. And then in terms of the threat of further sanctions, again, that is obviously going to be aiming at the energy sector most likely. This is something that Russia should be taking seriously.
So what does Russia think of what looks like Trump's pro-Putin behaviour, including that attack on Zelensky? Does that strengthen Moscow's hand?
Look, on the face of it, yes, it does strengthen Moscow's hand. I mean, they were, to be honest, completely taken aback by the language used by President Trump against President Zelensky. And there is a sort of sense of euphoria at the moment in Moscow. But tinged with that is a sense that, well, maybe things are just going too well. It's a little suspicious how Trump seems to be completely on side. We have the report that the U.S. is there's language in the G7 communique, the statement which has been watered down by the U.S. Removing a reference to an illegal invasion, and then of course this attack on Zelensky. But the suspicion is, the nagging suspicion is that Trump is trying to push Putin into an early ceasefire, and this is the rush towards having a summit, which Trump has said could happen as early as next week. It seems to be part of that, and Russia is wary of being railroaded into steps which it wasn't planning to take. So I think there is some caution on the Russian side.
All right, Bloomberg's Henry Meyer in Dubai. Thank you. Israel says a body returned as part of a ceasefire agreement with Hamas was not that of a young mother taken hostage with her 2 young boys back in 2023. Israel's military confirmed in a statement the militant group has returned the remains of the 2 boys. Thursday's exchange unfolded as negotiations for the second stage of the ceasefire are due to start. Now, the intention is turning the 6-week pause in fighting into an open-ended halt. Well, let's bring in Bloomberg's Middle East and North Africa editor now, Stuart Livingston-Wallace. So, Stuart, how is this incident going to impact ceasefire negotiations?
I mean, they were already pretty complicated, but this makes it even more so, just in terms of thinking about this particular hostage and how symbolic she and her family had become during the last 16 months or so in regard to kind of the fallout from that initial attack by Hamas on southern Israel. So symbolically not having that body back, and again, remember the return of hostages is so critical. I mean, not just in Israel, but everywhere, but particularly in Israel over the last year or so. The negotiations that we're going to sort of kick off again in terms of this second phase look like they were heading in the right direction with some wrinkles there. But I mean, this really poses a question about what form they might take and what exactly Israel will be demanding this time. Clearly, demand number one is we would like the body back, but then what comes after that? And then simultaneously, you have this ongoing concern about what do you do about the West Bank. You've had this failed, or what appears to be a failed terrorist attack overnight just outside Tel Aviv with these 5 bus bombings. Again, it's all building up to an increasingly complicated picture about where everything might go next.
Well, while this is happening, we've got Arab leaders getting ready to present a plan that would counter President Trump's Gaza rebuild plan. What do we know about this?
I mean, again, they're scrambling because, rather like in the previous segment talking about Ukraine, Trump has come out with a whole bunch of really, really surprising and sometimes shocking things about his view for how you solve the ongoing problem with Gaza. So clearly, most of what he said is completely unacceptable to the Arab nations. This would be a very, very serious problem for them domestically if it were to be implemented. So what they're trying to come back with is a unified approach for a counter-proposal that would look at this is how we're going to rebuild Gaza, this is what governance and security will look like, and hopefully get enough meat there to make it look credible. And then, a second step to that will be in how we're going to fund it and who's going to do the work and so on and so forth. So really what we're going to see over the next few days, I think, is a very, very concerted effort led by Saudi Arabia, obviously with help from Jordan, Egypt, UAE, Qatar, and so on, to come to this unified position, to have something credible to put in front of Trump that hopefully can dissuade him from this notion that you need to remove all the Gazans out of the enclave and make sure they never come back.
All right, Bloomberg's Middle East and North Africa editor Stuart Livingston-Wallace, thank you. Still to come, here why Sumitomo Mitsui Banking thinks the top risk the market is facing is policy miscalculation. Jeff Ng joins us next. This is Bloomberg.
This Sunday, Germany heads to the polls following the collapse of Chancellor Scholz's coalition. With the focus on the economy, migration, and geopolitical tensions, how will the German balance of power shift? Bloomberg Television has continuing coverage leading up to the election and will bring you the results after the votes are tallied with a special post-election broadcast. Tune in Sunday, starting at 5 p.m. London time. Only on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Asian stocks are trading higher, led by Chinese technology shares after Alibaba's strong earnings. Meanwhile, the S&P 500 slipped as Walmart's gloomy outlook weighed on US stocks. Joining us now is Jeff Ng, head of Asia Macro Strategy at SMBC. Jeff, thanks so much for joining us today. I do want to start with Alibaba, if we can. A really strong result there, meeting even the loftiest expectations. So we've got shares up more than 12% right now, up getting on for 50% this year. It's only February. I just want to put to you, if I can, the question of the day. Is this the year that Chinese tech outperforms the US?
Hi, thanks for having me. I think it looks like the year where, in fact, we are starting to see some stabilization in terms of the sentiment, the domestic sentiment coming out from China. I think over the past few years, sentiment has been more bearish. It is starting to see signs of stabilizing and improving, and we can see that in the tech stocks, and we can see that in certain high-profile names as well. I think with that improvement, it could also improve the domestic fundamentals, spending, and also on the retail trade. I think that is really going to be positive for the China economy if that really happens.
Yeah, we do still have, though, the broader China economy struggling with a few problems. The property crisis that just keeps on grinding on, one of them. Sluggish consumption as well, although that may be turning a corner. Also the risk of trade wars as well. How do you see policymakers balancing these risks? Do you anticipate we're going to see a little bit more stimulation?
Well, I anticipate that the policy making will likely be accommodative. I think there's a lot of uncertainties that could bring about downside risk to the economy. So policymakers are likely to perhaps err on the side of the caution, perhaps do more than necessary in order to stabilize domestic sentiment and help to improve the overall conditions for the economy. While I think China's property sector continues to still be sort of like languishing a little, it takes time to correct some structural rigidities, but I think I'm starting to see some early signs that at least, no further bad news. Things are looking more stable now compared to a year or 6 months ago.
Now, in terms of risks facing these markets, I know you consider policy mistake being the biggest risk of all. I'm wondering if you can give us a bit of clarity on that. Is it a policy mistake by the Fed or another central bank, and does it relate to inflation or something else?
Sure. I think when I'm thinking about policy mistake, it could be by anyone, any central bank, any institution. I think this year, of course, the main focus has been on Trump and his policies. So any changes in terms of how Trump is viewing the current world conditions, or any increase in tariff measures that could be implemented too abruptly, I think that could really trigger more uncertainties, more downside risks for the economy. And I think policymakers being unsure of perhaps what could be coming out from Washington, there's also some chance that there could be some policy mistake being too restrictive or too accommodative. So I think that is my top risk for the year because of all these uncertainties.
How about the risk of a policy mistake from the Bank of Japan as well? Because we saw inflation accelerating pretty hard in January, the headline number 4%. How do you feel the BOJ is moving here in terms of tightening? Is it a little bit slow, or is it getting the speed just right?
Well, we believe that the pace of about hiking once every half a year, I think it looks quite appropriate in the sense of examining if any rate hikes can cause the economic momentum to be dampened. So far, we haven't seen any, and I think the signs are looking encouraging for another rate hike in the third quarter of the year. I think bringing us closer towards 1%, perhaps even by next year. So I think that could help with having a more virtuous cycle of spending, and I think wage increases and some inflation are helping to boost the overall momentum in Japan.
So where are you looking to change allocations at the moment, maybe put capital to work somewhere else? What are your favourite investment ideas right now?
Sure. In terms of currencies, I think for the next 1-2 weeks, we see that the event calendar is quite conducive for some further dollar weakness. So that should help with some currencies like the Sing dollar, CNY, CNH, for instance. At the same time, we are still mindful and cautious that any announcements on tariff or protectionist measures could lead to some dollar strength over the next 3 to 6 months, as I think countries with significant trade surplus against the US get examined. There could be some downside risks to these currencies. So this may include the baht or the ringgit or the Vietnamese dong. But I think over the next 12 to 18 months, we still anticipate some dollar weakness. I think markets to still perform quite well in the light of some stable economic growth. That should also be quite positive for Asia markets as well.
All right, Head of Asia Macro Strategy at Sumitomo Mitsui Banking Corporation, Jeff Ng, thank you so much for joining us today. Just get you some breaking news across the Bloomberg at the moment. It is earnings from Standard Chartered. Fourth quarter results coming in a very narrow beat there. You see on the bottom of your screen the pre-tax profit, $1.05 billion. That's a little bit higher than the estimate. We have a final dividend per share there of 28 cents. Also, the announcement of a share buyback, $1.5 billion share buyback, and a plan to return at least $8 billion to shareholders from 2024 to 2026. Standard Chartered saying the cost to achieve of up to $1.5 billion buyback is fit for growth. Just looking for some other headlines for you here. Also sees growth expected to be below 5 to 7% range. But that headline number, a beat, pre-tax profit $1.05 billion, 28-cent dividends and a $1.5 billion buyback. Still to come, South Africa's President Ramaphosa downplays his rift with Donald Trump and urges unity across G20 nations. We'll be live in Johannesburg next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. South African President Cyril Ramaphosa has urged Group of 20 nations to set aside their differences and focus on tackling the world's most pressing challenges. Speaking at the first major G20 event without the US, Ramaphosa downplayed a rift with President Trump, saying the country will work to iron out wrinkles in its relationship with the US. So for more, let's get to Johannesburg and Bloomberg's Jennifer Zabasaja. So, Jen, what more did we hear from Cyril Ramaphosa?
Yeah, Paul, good morning to you. Listen, we did hear Ramaphosa really trying to set aside any sort of these differences that we have been hearing over the past few weeks between South Africa and the U.S. and really try to drill down what his agenda is, which is promoting this idea of reforming multilateral institutions, but then also promoting multilateralism. It's hard to see how that's possible, especially with the rift that we are seeing between the U.S. and South Africa. But we did hear Ramaphosa saying that not only is this important for multilateralism, but it's also important for, it says the summit's location underscores the need for African voices to be heard on critical issues like sustainable development, digital economy, and a shift towards green energy. Excuse me. Now, if you take a look at the G20, Paul, over the past few years, we have seen a lot of these members really differ on some of the key issues that are being faced in the world right now. And so Ramaphosa's really trying to drill down and bring home the fact that maybe members can come together and try to find unity in terms of resolving some of these issues. And so the question is, how are the members absent the U.S. going to be able to do that, especially because the U.S. makes up such a big part of the G20?
Yeah, and they're not there. So what's the snub from the US going to mean for the agenda?
Right. And, you know, we're not seeing Secretary of State Marco Rubio this week. We also heard from Treasury Secretary Scott Bessent saying he's not going to be attending the finance ministers meeting, which is next week. Although the interesting part of this is that as the U.S. potentially steps aside, we're seeing other nations then step up to the plate. And we actually heard on Thursday from President Ramaphosa actually reportedly inviting President Volodymyr Zelensky of Ukraine to a state visit here in South Africa. So the question is, if we see the U.S. continuing to retreat from many of these multilateral institutions and convening, do we start to see other partnerships strengthen and also form? We know that BRICS, of course, is a very important part of these leaders' agenda, and it's also been a target for President Trump. And so many people are wondering, this is the first meeting of the G20, of South Africa's G20 here in 2025. Will the U.S. later this year start to engage more, and then will President Trump come to the Leader Summit that's in November? So there's a lot on the agenda, and it will be fascinating to see how some of these relationships develop and strengthen absent some of the key leaders actually in the U.S.
All right, Bloomberg's Jennifer Zabasajja in Johannesburg. Thank you. Now, let's take a look at some of the other stories that we're following. China and Korea have sent $4 million to Africa to help plug some of the immediate health funding gaps left by President Trump's freeze on various aid programs. Africa receives about 84% of its healthcare funding from outside the continent, of which the US had pledged to contribute $500 million. It's so far committed $385 million, leaving the Pan-African Public Health Agency with a large funding gap to fill. The IMF is in Mozambique, pledging continued support on a visit to the southern African nation. Months of deadly protests shook the economy last year in the wake of a disputed election in October, with unrest hitting government revenue, compounding a growing debt problem. Mozambique's IMF program is scheduled to end in March, with a fifth review still pending. Let's take a look at S&P futures ahead of the US Open. Kind of flat at the moment, just softer by a few points. Nasdaq futures, it's a similar story there. Looking ahead to the Open in Europe, looks like it's going to be a flat start there as well, following on from what's been a somewhat mixed picture in the Asia Pacific. Still to come, Arab leaders set together in Riyadh to discuss a proposal to counter President Trump's Gaza plan. We'll have more on what that might include next. This is Bloomberg. This is Horizon's Middle East and Africa. Our top stories this morning. U.S. Treasury Secretary Scott Bessent tells Bloomberg that sanctions relief for Russia could be on the table in talks to end the war in Ukraine. The South African president urges G20 nations to set aside their differences and focus on tackling the world's most pressing challenges. Cyril Ramaphosa also downplaying a rift with the U.S. at the opening of the foreign ministers' meeting. And Alibaba's shares surge in Hong Kong as the Chinese tech giant is able to impress investors with even the highest expectations about its AI business. Well, it's just gone 8:30 Friday morning across the Emirates. It's 3:30 Friday afternoon here in Sydney. I'm Paul Allen in for Jemana Besetche. Let's take a look at some of the assets that we're tracking. We've been keeping an eye on yields. Not a lot of movement there, though. We've heard from a couple of more Fed speakers. Alberto Mussolem saying the increased inflation risk might see inflation stall above 2%. Well, that could see policy remain restrictive. Raphael Bostic, though, acknowledging that uncertainty, but says he still sees 2 more cuts this year. Take a look at oil prices as well. They're kind of hanging on to the gains we've seen, but we are seeing oil heading for its biggest weekly gain since January on ongoing supply concerns, and gold continuing to be a bright spot, although it is off the record highs that we saw on Thursday. Still got that 3,000s level, still well in sight. Well, let's check on the yen meanwhile. Avril Hong's in our Singapore studio. Avril, not a lot of movement in the yen following those inflation figures from Japan.
Yeah, after the Japan headline CPI as well as the core print showed that inflation accelerated, we didn't really see it budging. But I just wanted to walk you through the yen moves in the past day and a half or so, because we saw it actually overnight dipping below 150 on dollar yen. Some of this was on the greenback side of the trade, right, with the Bloomberg dollar index hitting its lowest level since December 10th. And then we got those Japan CPI numbers, a bit of unwinding of the yen strength. But what really spoiled the party, and in terms of why you're seeing dollar yen back above 150, is what we heard from Ueda-san, the BOJ governor. He spoke in Parliament and sounded a bit more dovish than what we heard a day ago, where he said he had met with Ishiba, and in their regular meeting, they apparently did not talk about rising yields. But speaking in Parliament today, he said that the BOJ will respond nimbly in terms of perhaps asset bond purchases if they see that sharp rise in yields. So that really stole the rally in the Japanese currency. As I say, we're back above 150 indeed. If you look at the yen's declines, they are by the most in a week, Paul.
All right, Avril Hong in Singapore, thank you. Well, Saudi Crown Prince Mohammed bin Salman is striving to rally fellow Arab leaders around a plan for post-war Gaza. Now, the plan would serve as an alternative to proposals put forward by President Trump and ensure Palestinians are not displaced. Bloomberg has learned the kingdom's de facto leader is expected to host counterparts from Egypt, Jordan, Qatar and the UAE in Riyadh to discuss the proposal. Well, Paul Wallace, who leads our Middle East and North Africa economy and government coverage, joins us now. So, Paul, what more do we know about this plan in terms of details?
Well, this is essentially an attempt by these big Middle Eastern powers to come up with an alternative to what Donald Trump has been proposing over the last few weeks, which is a displacement of the 2 million Gazans from the Gaza Strip to somewhere else, primarily Egypt and Jordan, while the war-ravaged territory is rebuilt. That plan, that suggestion is pretty much complete anathema in the Arab world. And this is Saudi Crown Prince Mohammed bin Salman's attempt to unify the big Arab powers to give Trump something else, another plan that will satisfy him and which will ultimately lead to the reconstruction of Gaza without Palestinians being displaced from the territory. They're not completely on the same page yet. There's a bit of work to do, and I think that will be key today when these leaders meet in the kingdom. Their decisions they need to hash out. I think none of them want Palestinians to leave, and they believe that reconstruction can happen without a mass movement of people to Egypt or Jordan or whatever. But there are still big questions over who will govern the territory. If it's not Hamas, then who is it? How effective will that group or those groups be? If it's not Hamas, will they be able to disarm Hamas? And also, crucially, will Israel accept it? That will be a big question mark hanging over this. I think whatever is decided today and in the coming weeks will probably be met with a lot of skepticism in Israel and disbelief that the plan will be able to ensure that Hamas is disarmed and out of power within Gaza.
Yes, and you mentioned the issue of displacement of Palestinians. How likely is this plan to persuade Donald Trump of the wisdom of not doing that?
That is the big question. I mean, he has heard it, and his aides and ministers have heard it loud and clear from Arab leaders and Palestinians and others over the last few weeks that there should be no displacement whatsoever. They would see that as a form of ethnic cleansing. Of course, Donald Trump is sticking to his line and saying this is the only way forward. The only way forward is to move 2 million Gazans out of Gaza, and he's even spoken about how they wouldn't have a right of return. This is all extremely sensitive in the region, and something that the Arab world simply does not agree with. But I think if they can get something to Trump, that even if it's not what he originally proposed, but that seems to work, and especially if Israel is more or less on board with it, then I think Donald Trump and the White House would, broadly speaking, be okay with that. If they see it as a path towards continuing the ceasefire that's in place in Gaza and, you know, turning it into a real peace, then yes, I think the U.S. would be satisfied with that. But it's a big step to get from where we are now to that point.
All right, Paul Wallace, who leads our Middle East and North Africa economy and government coverage. Thank you. Shares of Alibaba soared in Hong Kong after the Chinese e-commerce giant reported its fastest pace of revenue growth in more than a year. Bloomberg Intelligence senior analyst Robert Lee joins us now with more. So, Robert, a lot to unpack here, but let's just start with its two most important divisions, e-commerce and cloud. What were the highlights?
Okay, so on the e-commerce side, I guess the market took confidence that things are beginning to get back on track. So the economic headwinds within China's economy are still there, but the company seems to be navigating those quite well. The competitive issues they've suffered from PDD and others, again, seem to be being addressed. Alibaba's being very competitive in terms of its pricing, maybe taking a hit to margins, but net-net, they're maintaining or even building their market share. So no great worries on that side. But the focus of events, the focus of headlines, the focus of the con call was AI. So if you remember, about roughly 2 years ago, the company tried to reposition itself into AI. It sort of split up into different businesses. That didn't go particularly well. But now, given the growing momentum and the renewed focus on China AI following DeepSeek, the company is firmly repositioned as an AI play. They talked a lot about something called AGI, or Artificial General Intelligence. They're hiking their CapEx significantly. The management said they would be spending as much in the next 3 years on AI-related CapEx and R&D spend as they have in the last decade combined. So really, they're taking a big view on this. The question is, though, at what point will they get the payoff and the monetization?
Yeah, that is a big question. The push into artificial general intelligence, the next big hurdle for a lot of these companies. But you know, as you say, so far the returns aren't yet there. What are analysts saying about this big push into AGI?
Well, on AGI is an AI model that is approximately on par with a human level of intelligence. Now, you know, this is something straight out of the realms of science fiction. Now, I would argue, based on a more in-depth understanding of the current generation of models, there are big question marks as to whether we can actually achieve that. So the current generation of models are great efficiency tools or whatever, but in no way do they match human levels of intelligence. So really, we require a significant technological breakthrough in order to get to this holy grail of AGI. The timing on that remains completely unknown. The probability as well is, you know, not particularly high. It's the holy grail, as I said. Alibaba is not the only company gunning for this. All the US tech platforms, I mean, it's what the whole industry is trying to achieve. How long it will take to get there, and also whether they will get there, remains completely in question. But just go back to the monetization front. Just doing a little bit of analysis, pulling numbers on the back of the earnings statement last night. If you look at their incremental cloud sales in US dollar terms compared to the same quarter a year ago, they generated incremental US dollar cloud sales of $107 million US dollars. Okay, so that's the incremental revenue. In the quarter alone, they spent $4.4 billion on CapEx. So I would say that's a pretty poor return on investment. And as we know, there are cutthroat levels of competition in both the cloud sector and the AI sector in China. So I think this whole monetization question is the elephant in the room. Clearly, the stock market is ignoring that at the moment. Look at the share price reaction. But if these companies, not just in China, but in the US and elsewhere, don't start monetizing, then, you know, for what are they spending these vast levels of capex?
Yeah, if we achieve AGI, I suspect monetisation is going to be the least of our worries. Bloomberg Intelligence senior analyst Robert Lee there. Let's take a look at some of the other stories that we're following. Walmart shares plummeted after it forecast lower than expected profit for the full year, a signal that the world's largest retailer isn't immune to global risks. The company also cites uncertainties related to consumer behaviour as a reason for its cautious outlook. Walmart's guidance doesn't include the potential impact of tariffs, which remain a big question mark for retailers. JP Morgan has reclassified Qatar and Kuwait as developed markets and will soon start their removal from its emerging markets bond index in a phased withdrawal. JP Morgan's emerging market universe is widely tracked by investors, and the loss of the two investment-graded countries could increase the average risk in the asset class. The US bank also says the UAE may be taken out of the cluster next year.
In Germany, a long-standing agreement between mainstream political parties has successfully blocked the far right from power ever since the end of the Second World War. But ahead of the election, how strong is Germany's so-called firewall? In January, conservative favorite for the Chancellery, Friedrich Merz, attempted a hardline overhaul of migration policy. And the motion received backing from the Alternative for Deutschland, breaking with that political tradition and sparking protests across the country. The anti-Euro and anti-immigration AfD first won seats in the national parliament back in 2017, a rebuke to Merkel's open-door refugee policy. 7 years later, as immigration climbed the list of concerns and economic stagnation set in, the AfD would win its first ever state election.
Germany is not in a very good state. We have the highest energy prices worldwide. We are in the middle of a migration crisis.
AfD leader Alice Weidel is running on a policy of mass deportation. It's a message that's also found favor across the Atlantic.
No voter on this continent went to the ballot box to open the floodgates to millions of unvetted immigrants.
While the AfD support for Merz's border bill did little to hurt him in the polls, he'll need at least one coalition partner for a majority.
We will not take these right-wing populists into a government which is led by me. Never.
But no matter what mainstream politicians say, the far right has shifted the political debate in Germany. And as for Weidel, she was all too ready to declare that the firewall had fallen. Oliver Crook, Bloomberg, Berlin.
That's Bloomberg's Oliver Crook on the rise of the far right in Germany. And we're going to get more from Oliver in Berlin later in the show. Let's turn now, though, to the UAE, and Dubai is planning to build a solar plant with battery storage after Abu Dhabi unveiled a similar but bigger project that will cost $6 billion to build as the UAE pursues ambitious clean energy goals. For more, let's bring in Bloomberg's Verity Ratcliffe in Dubai. So, Verity, why are they installing batteries alongside the new solar projects? Other countries do the same?
Well, it's to deal with this age-old problem with renewables, the intermittency of production. So when the wind is blowing, the sun is shining, you produce more, which is sort of an issue when it's being dispatched onto the grid. If you have a battery there, it means that you can smooth out those peaks and troughs in production, and you can dispatch more regularly, more continuously. There are similar projects in the world. There's a 1.4 gigawatt-hour project in the US, energy storage project attached to a solar project. The Abu Dhabi one will be 19 gigawatts hours, so a lot larger. If it was built today, if it was completed today, it would be the biggest in the world. And Dubai is building a similar size battery storage, but attached to a much smaller solar facility. It's about 1/3 of the size. But these are big projects.
Yeah, in terms of the scale of these, can you give us a bit more of a sense of it and the impact that they're going to have in the fight against climate change?
Well, if you look at the land coverage that these projects will require, it's enormous. The Abu Dhabi project is about the size of Copenhagen. But that's the sort of size that they have to think in terms of, because the UAE is aiming for 44% of its power from renewables by 2050. And even then, these projects are a small drop in the ocean of the overall electricity production. And they're chasing this moving target all the time. Dubai recently said that the electricity demand in the Emirate is rising 5.5% year on year. So that target keeps moving, that they have to keep up with, and they need an enormous amount of clean power to even come close to it.
All right, Bloomberg's Verity Ratcliffe, thank you. Let's take a look at how markets are tracking at the moment, looking ahead to the open in Europe. Futures looking a little bit soft ahead of the open there, only off by about 0.1%, though. We've got S&P futures looking kind of flat as well. It's a similar story for Nasdaq futures and the Dow Jones also. Now, we've heard a little bit from Fed speakers as well. We heard from Alberto Musalem. He says increased risk around inflation. Could see it stall above 2%. There's a lot of uncertainty, of course, around what Trump's trade policies might mean. So policy may need to remain restrictive. Raphael Bostic also acknowledged uncertainty. He still sees 2 rate cuts this year, but looking ahead to a softer open in Europe. Kind of a mixed picture at the moment here in Asia. Taking a look at treasuries, I already mentioned some of the factors at play there. We're seeing yields easing off from some of the highs that we saw earlier in the week. The 10-year right now, 4.4839. Want to check in on oil too. Oil looks like it's going to hold on to some of the gains that we've seen this week. It's Brent is sort of flat for the day at the moment, 76.47 at the moment. Notwithstanding this modest pullback, we do expect to see oil heading for its biggest weekly gain since early January. Of course, there is a lot of supply uncertainty circulating around oil at the moment. All right, still to come in the next hour, we're going to be discussing asset allocation in light of global risks. Tarek Fadlallah of Nomura Asset Management is going to join us. I'm Paul Allen in Sydney, in for Jemana Beseche. Stay with us for the second hour of the show. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. U.S. Treasury Secretary Scott Bessent tells Bloomberg that sanctions relief for Russia could be on the table in talks to end the war in Ukraine. The South African president urges G20 nations to set aside their differences and focus on tackling the world's most pressing challenges. Cyril Ramaphosa also downplaying a rift with the US at the opening of the foreign ministers' meeting. Plus, Germany heading to the polls this Sunday, and it's a tumultuous period for the economy. No party is projected to win outright. A coalition is almost guaranteed. We'll be live in Berlin later this hour. Well, it's just gone 9 a.m. Friday morning across the Emirates. It's 4 p.m. Friday afternoon here in Sydney. I'm Paul Allen in for Jemana Beseche. Let's take a look at how markets are tracking at the moment. We are, of course, as always, watching the yield on the 10-year, 4.48. Not a lot of movement there today. It's been coming down a little bit. Bloomberg did speak to the Treasury Secretary for the US, Scott Bessent. A number of headlines coming out of that conversation, including Bessent saying that any move to boost the share of longer-term treasuries and government debt issuance, that's some way off. He cited a number of hurdles, including elevated inflation and the Fed's quantitative tightening program. But he did say all of President Trump's policies, in fact, disinflationary. Take a look at the oil price. Crude sort of holding on to gains. That notwithstanding, it's still heading for its biggest weekly gain since early January on supply uncertainties. Gold reversing away from the highs that we saw it hit on Thursday, but yeah, the trend in terms of haven demand still seems to be pretty firmly up from here. Well, let's check in on how markets in Asia are faring. Avril Hong's in our Singapore studio. Avril.
Yeah, Paul, we're back from the lunch break in China. So take a look at the focus of markets today. Alibaba, after its earnings, it's revving up, those gains accelerating since we started the afternoon session. And of course, this is against the backdrop of those scorecards which show that its main business, i.e. e-commerce, it beat expectations, but also in its side gig, i.e. its cloud, its AI business, it also exceeded expectations. So investors, I think, are taking this as a sign that not only is the outlook bright for Alibaba, but so too for other Chinese tech names. It's pulling along with it Tencent as well as JD, and the Hang Seng Tech is actually at its highest level since at least early 2022. It is also lifting the region's benchmark. We're headed for a 6-week of gains, and we're seeing it, really the weekly performance up, I think, about 1%. There you see that optimism and how that's fueling the Hang Seng Tech gauge, and all this turbocharging the Chinese tech stocks and really ignoring for now the signs that some of these Hong Kong markets are overextended in terms of the rally we've been seeing off late.
All right, Avril Hong in Singapore, thank you. Well, the US has signalled that sanctions relief for Russia could be on the table in talks over the war in Ukraine. Treasury Secretary Scott Bessent telling Bloomberg that Washington is prepared to either ramp up or take down penalties based on the Kremlin's willingness to negotiate. Bessent also criticised Ukrainian President Volodymyr Zelensky for suggesting President Trump is misinformed about the war.
A lot of his remarks in Munich I thought were inappropriate. President Zelensky, when I met with him, assured me that he'd be signing the minerals deal in Munich. He has not. And look, the real purpose here, and I think it's turned into kind of this media circus, that President Trump had a very elegant plan.
Well, let's bring in Bloomberg's Russia economy and government editor Greg Sullivan in Dubai. So, Greg, what will that sanctions threat play a role in the progress of talks here?
Absolutely, a big role. These were the most explicit signals yet from the U.S. that sanctions could be involved in these negotiations. They serve basically two things. On one front, they break the united front with Europe. Europe has sought with sanctions to project a united front against Russia, a show of strength, and this sort of undoes that. It also plays into Russia's hand. It definitely strengthens Russia's hand. This was likely to be a key demand from the Russian side in any negotiations, and here we have the U.S. putting forward what basically is a key concession to the Russians, or could be a key concession to the Russians early in the negotiations, while Russia keeps their cards closer to their hands. So that, coupled with the comments, we did hear Bessent say that Zelensky's comments were inappropriate. That really does shift the tone and tenor of the negotiations, and must have leaders in Kyiv a bit worried.
Well, how are Trump's recent criticisms of Zelensky being received in Kyiv and also Moscow?
That is a great question. I mean, in Kyiv, there's certainly a sense of defiance among Ukrainians. They're pretty hardened after 3 years of war, but there's no doubt that they're pretty unsettled by these latest policy shifts and harsh comments. There's anger and bewilderment at what is actually going on. A former ally, a former huge source of support for the war is suddenly turning against the leader. There is a sense that this could rally the Ukrainians around their criticized leader, but for now, there's definitely some bewilderment and shock. In in Moscow, too, there's surprise. The Kremlin was caught off guard with just how quickly and how harsh the change of tone towards Zelensky was. And while this is exceeding their wildest hopes for how they could change the view of the U.S. on the war, there's still a sense of caution, a sense of wariness. They don't understand Trump's negotiating strategy. He's famously mercurial. He could change at any moment, and there could be unforeseen traps down the road. So they're really struggling to try to understand and analyze how this White House operates, what their negotiating strategy is, and what could potentially lie ahead for them, and how to turn that to their advantage.
All right, Bloomberg's Russia economy and government editor Greg Sullivan, thank you. Well, Israel says a body that was returned as part of a ceasefire agreement with Hamas was not that of a young mother taken hostage with her 2 young boys back in October 2023. Israel's military confirmed in a statement that the militant group has returned the remains of the 2 boys. Thursday's exchange unfolded as negotiations for the second stage of the ceasefire are due to start, with the intention of turning the 6-week pause in fighting into an open-ended halt. Let's get to Jerusalem now, speak to Bloomberg's Dan Williams. So, Dan, how will this incident impact ceasefire negotiations?
The impact could be dramatic. What was a national day of mourning yesterday with the return of these bodies looks very likely to turn into a national day of outrage today. Israelis will feel cheated. In fact, the government has already said that Hamas cheated on the deal by providing the body of an anonymous woman, a woman whose records don't match any of the hostages or the women believed to have died on the Israeli side in Gaza. The Israelis simply don't know who this woman is, and they're saying Hamas reneged on its promise by not providing this body. There was an additional disclosure by medical examiners that the 2 young sons, one was a baby at the time of his kidnapping, the other a 4-year-old, were found to have been murdered in captivity by their captors. This, of course, clashes with Hamas's insistence that they were killed accidentally during an Israeli barrage. So there really is a double whammy in terms of Israeli fury looking likely, and it could really potentially not derail, but it could hold up. The last stage of this release. There's a big release expected on Saturday of 6 live hostages, and also what is the efforts being made to turn this, as you know, to negotiations on a longer-term accommodation. I think we're going to be looking today to see what Hamas does in response to Israel's allegations and what the mediators and the United States do in order to try to keep things on track.
So against this backdrop, we've also got Arab leaders getting ready to present a plan to counter President Trump's plans for Gaza. What more do we know about this?
Well, President Trump's plan galvanized or really shocked everyone, including, I think, the Israelis to a degree. You'll recall it would entail removing, moving out, relocating, depends on what verb you choose, the bulk of Gaza's Palestinians to make way for US-led makeover of the territory. He wanted it to be the Riviera, a new Riviera on the Mediterranean. That would take 10 to 15 years, according to US estimates. Now, the Arab world is united in not wanting to see a mass exodus of Palestinians from the Gaza Strip, certainly not to Egypt or Jordan, which are the 2 countries that Trump mentioned. So the Saudi de facto leader is bringing leaders of those countries and 2 other Gulf powers in to discuss an alternative. From what Bloomberg has reported, my colleague Sam Daher, this would entail keeping those Palestinians in situ in the Gaza Strip. Even those without homes would be accommodated, essentially in what would be more hardened refugee camps with caravans, etc., forming a police force for security that would not be officially with Hamas, and then working on reconstruction on the basis of a government led by a kind of civic society mechanism. This would not, however, meet Israel's demand for a total ouster of Hamas and a total demilitarization of the Gaza Strip. Hamas has given no indication to give up its arsenal. So while this fledgling Arab plan would appear to be inching toward some sort of accommodation or accommodating what both sides would agree to here, it may not be enough yet. But again, President Trump may, according to some of his people, may be looking for an alternative to what he offered, a workable alternative. So again, the question is whether he will see this as a step in the right direction.
All All right, Bloomberg's Dan Williams in Jerusalem. Thanks for joining us. Still to come, we're going to get the market outlook with Nomura Asset Management as markets assess structural shifts amid a tariff war and geopolitical tensions. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Asian stocks are trading higher, led by Chinese technology shares after Alibaba's strong earnings. Meanwhile, the S&P 500 slipped on Thursday as Walmart's gloomy outlook weighed on US stocks. Joining us now is Tarek Fadlallah, CEO of Nomura Asset Management for the Middle East. Tarek, thank you so much for joining us today. We have seen a huge run-up in the S&P recently. When you see a little pullback like we've had, do you add to positions, or is there other more attractive alternatives to US markets at the moment?
Good morning, Paul. Yes, when we talk about a pullback, let's put it in the context of, a 30% rally that we've had since the beginning of last year. I mean, that's an absolutely stunning performance for such an already large market. I think what we see today is a search for alternatives. US exceptionalism has been ongoing now for some time. Europe has been in the doldrums. China's been very volatile. There's really been little scope to play outside of the US markets. But this year we see, as I said, a search for alternatives away from the concentration. And so we see opportunities in places like Europe and China, you've just mentioned. So whether this pullback is enough to tempt investors to increase their US allocations remains to be seen. But I suspect that there are other places that investors would prefer.
Well, can I give you Exhibit A, Hong Kong? We've got a big run-up in the Hang Seng just today, particularly the tech index, and we can park a lot of the credit for that at the door of Alibaba, which exceeded even some of the wildest expectations heading into its earnings. Is this a place where you'd be looking at? Is this the year for Chinese tech to shine?
Yes, I mean, looking at the Chinese market, it's clearly, more than the tech stocks. I was just looking at BYD, the world's largest car maker, EV car maker and battery manufacturer. And that's had a stunning rally since the beginning of this year. So I think China is very much in favor. The Chinese authorities are clearly determined to make sure that the economy hits its targets. And there are plenty of companies in China. And of course, DeepSeek has helped to raise the profile of technology companies to show investors that it's not just about the US.
Yeah, does the China story remain robust, though, when you think about it in the context of a potential trade war this year?
I mean, that's obviously the, trillion-dollar question. I think for the time being, for whatever reason, President Trump seems to be reluctant to engage aggressively with China. So until and unless we see the tariffs get announced, I think that China continues to rally, and we'll see what happens later.
Well, another market that's been rallying quite hard is Europe. We've got some very cheap valuations there, and whenever we see cheap valuations, we have to remember that they are cheap for a reason. There's a number of variables here to consider, and we have the German election coming up this Sunday as well. So, how do you approach European assets at the moment?
As you say, European assets have been cheap for some time. The underperformance of Europe relative to, for example, the MSCI ACWI index has been very easy to monitor over the last 5 or 6 years. There is a sense that Europe may be at some kind of inflection point. We have the German elections, which might lead to debt finance spending, which is obviously positive for the economy in the short term. I think my concern concerns about Europe are those that have been expressed widely in recent years, and that is that we have structural issues which Mario Draghi outlined in his report on European competitiveness. And unless we address these structural issues, any rally is likely to be fleeting and unsustainable.
I'd just like to get your views on central bank policy as well. I mean, the Fed's been sounding fairly calm in terms of its outlook for potential future rate cuts in 2025. There's a possibility we don't get any at all, but markets just seem to be shrugging this off. Fundamentals seem to matter more at the moment. Is central bank policy taking more of a back seat now?
Yes, look, I lived through the last period of high inflation, and ultimately that period was only ended by a recession. At the moment, we don't see a recession on the horizon, and as such, there are very few factors that could pull down inflation. Economies are buoyant, capex spending by corporates is strong, household balance sheets are good. So for the time being, it's unlikely that inflation of its own will decline towards the Fed's target. So I suspect that for the time being, the Fed will just stay and watch.
Just before we let you go, Tarek, I'd like to get your thoughts on gold, which has had a huge run-up. Is that a part of your allocation at the moment?
Gold should be a part of any portfolio. I personally am not a big fan of gold because it's an unproductive asset. It's a store of value. It's a means of exchange sometimes, but it doesn't produce like a company does, or even a bond with a yield. So I suspect that the reason that gold may continue to rally is that money supply is increasing. Central banks around the world are generally in an easing mode. So gold continues to be in favor.
All right, that's Tarek Fadlallah, Middle East CEO at Nomura Asset Management. Thanks so much for joining us today. Still to come, Treasury Secretary Scott Bessent tells Bloomberg that the US could adjust Russia sanctions if it means a potential deal to end the war in Ukraine. We'll have that interview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. The US Treasury Secretary says sanctions relief for Russia could be on the table in talks over the Ukraine war. Scott Bessent told Bloomberg that the US president is committed to ending the conflict very quickly, despite Ukraine's Volodymyr Zelensky suggesting Trump was misinformed about the war.
I think President Zelensky, unfortunately, escalated and has put some daylight between.
How did he escalate?
A lot of his remarks in Munich, I thought were inappropriate. President Zelensky, when I met with him, assured me that he'd be signing the minerals deal in Munich. He has not. And look, the real purpose here, and I think it's turned into kind of this media circus, that President Trump had a very elegant plan, and it was bring the Ukrainians closer to the U.S. Let's do this economic deal. And even Karl Rove in the Wall Street Journal this morning approves of it, that the U.S. with greater economic interest in Ukraine provides a security shield. So the sequencing of what was going to happen was bring the Ukrainians closer to the U.S. Through economic ties, convince the American people and the American public, get them on side, and then tell the Russians, go to the negotiating table with a very fulsome message that if we need to, we will take sanctions up.
Well, what about tapping the Russian frozen assets, some $300 billion? Would you force your European counterparts to not just have them frozen, but actually tap them? Trump talks about repaying the American taxpayer. Shouldn't Russia be a part of that?
Well, what's happening now is they are being tapped. So the returns from
interest,
the returns from the freezed asset pile is going to pay the Europeans. You know, what's very important to understand here is that everything the U.S. has done to date The American people, the American taxpayer, is grants. The Europeans, roughly half of what they've done are loans, and the runoff from the frozen assets is being used to repay European loans.
Have you communicated that to the Europeans, that you're upset with them?
What's that?
Have you communicated to the Europeans that you're upset with them?
I think Vice President Vance did a pretty good job in Munich.
Do you think they understand that the United States is running a deficit of north of 6%, close to 7%, and that the budget for defence is north of $800 billion? Do you think they understand the gravity of the moment in the United States, the US perspective?
Look, I think that they understand that President Trump, during his first term, this term, Vice President Vance, and the entire security apparatus have told them that many of the countries are deficient in their NATO spending, and they need to come up.
That's US Treasury Secretary Scott Bessent speaking there with our colleagues on Bloomberg Surveillance. That was a wide-ranging conversation as well. Scott Bessent made remarks on a number of things, as well as the issuance of fresh US debt. If we take a look at our treasuries are tracking at the moment, we have seen yields coming off just a little bit. Scott Bessent was saying that as the market starts to realise what we're doing and inflation starts to drop, then we're going to see that most of President Trump's policies are in fact disinflationary, so running counter to some of the caution being expressed from the Fed at the moment when it comes to waiting and seeing for the impact of some of Trump's policies, particularly around trade. We've got the yield on the 10-year there, 448.58 right now. Taking a look at oil as well, the price there holding fairly steady. Looks like oil is set for its biggest weekly gain since early January, 76.36 for a barrel of crude at the moment. Okay, still to come, South Africa's President Ramaphosa playing down his rift with Donald Trump. He's urging unity across G20 nations. We're going to be live at the event in Soweto next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. US Treasury Secretary Scott Bessent tells Bloomberg that sanctions relief for Russia could be on the table in talks to end the war in Ukraine. The South African president urges G20 nations to set aside their differences and focus on tackling the world's most pressing challenges. Cyril Ramaphosa also downplaying a rift with the US at the opening of the foreign ministers' meeting. Plus, Germany heading to the polls this weekend amid a tumultuous period for the economy. Will undecided voters dent the leave of Conservative Friedrich Merz? We'll be live in Berlin later. Well, it's just gone 9:30 Friday morning across the Emirates. It's 4:30 Friday afternoon here in Sydney. I'm Paul Allen in for Jemana Besetche. Let's take a look at some of the assets that we're tracking. I did mention gold before. It is continuing to push towards that $3,000 an ounce level. It is off some of the highs that we saw on Thursday. We've also seen holdings in global ETFs linked to gold reach their highest level since January 2024. And just to give you a sense of how gold's been performing against other assets, it's up 12% year to date, and that puts global stocks at 5%, treasuries there at 1%, even Bitcoin failing to keep up with the gains that we've seen in gold. Got the yield on the 10-year, meanwhile, 448.58, and crude easing off some of the highs that we've seen earlier, 76.35 a barrel, though it is set to end the week higher. Let's check in on how markets in Asia are faring. Avril Hong's in our Singapore studio. Avril.
Yeah, Paul, let's talk about Japanese auto stocks, because in the early part of this hour, we've got that red hit crossing the terminal, reporting by the Financial Times that suggests a Japanese group is drawing up plans for Tesla to invest in Nissan. And of course, this is the troubled automaker where earlier in the month, we heard how that Nissan-Honda tie-up that was seen by some as a bailout.
All right, we just lost Avril Hong there, but she was talking about the potential tie-up between Tesla and Nissan. We're seeing Nissan shares better by more than 9% at the moment, so a pretty profound movement there. All right, let's get to South Africa now. President Cyril Ramaphosa has downplayed a rift with President Trump, saying the country will work to iron out wrinkles in its relationship with the US. Speaking at the first major G20 event without the US, Ramaphosa urged the group of 20 nations to set aside their differences and focus on tackling the world's most pressing challenges.
We continue to call for the UN Security Council, the multilateral trading system, and the international financial architecture to be realigned, to be reformed, to make them more representative, more agile, and more responsive to today's global realities.
All right, for more on this, let's get to Bloomberg's Jennifer Zabasajja. She is at the event in Soweto in Johannesburg. So, Jen, what more did we hear from President Ramaphosa?
Yeah, Paul, it's still early in the morning here, so not too much activity, but we're expecting it to pick up later, especially if you consider a lot of the foreign ministers who are here. We have been told that of the member states and also the invited guests, there's about 35 foreign ministers who are actually here. We saw some of them start bilaterals yesterday. There's some more planned today. And as you were just saying, yes, President Ramaphosa wants to continue on business as usual, despite the representation of Secretary of State Marco Rubio. And we just heard a bit of the priorities that he has there. He's also very keen to tackle a lot of the issues that he says are African-related issues, but also issues of the global South. And having the convening of G20, both advanced and emerging economies, is an opportunity for that. And so the expectation is later on we will hear more about the debates and the lack of consensus around some of the biggest geopolitical issues that are facing the world today, and potentially how the G20 members can at least try to come together to find some consensus. As you mentioned, this is the first G20 meeting of the year of the South African G20 presidency. Foreign ministers are concluding their meetings today. Next week is finance ministers, and we will not see Treasury Secretary Scott Bessent there. And so there is a lot of discussion about how the U.S. is absent, but still many of the leaders trying to press on and actually make some progress on their own agenda items.
So without the US there, does this snub have any impact on the agenda?
You know, it's interesting, Paul. Many people are saying, you know, as you were saying there, business as usual. They don't want to call it necessarily a boycott, because we will see some U.S. representatives here. Scott Bessent, we heard speaking with our colleagues, saying that he's focusing on domestic issues in the U.S., which is why he's not here. But still, we will potentially hear some of the issues that the U.S. will bring to the table, and also potentially how they iron out some of the discrepancies, I guess, the gaps in which they still exist between a country like South Africa and also the U.S. But it also really opens up the door for other partners to come in. We have heard from the likes of China, also the EU members who are here, who are again expressing their support, not just for the G20 members, but also for South Africa. And just as somebody who has covered the BRICS nations, which all of them do encompass those in the G20, you can expect to potentially see some of these ties strengthening and getting towards potentially more unification between some of these members. And so the big question is, what will the U.S.'s representation for the rest of the year look like? Will they continue to retreat from multilateral institutions and convenings like the G20, or will they eventually come to the table? And so that's the big question. But President Ramaphosa trying to say we are still here and pressing on and addressing the issues that we intended to address. And last thing, Paul, I should note, South Africa has to hand the presidency of the G20 over to the U.S. for 2026. And so, again, we'll have to at some point see these two leaders discussing what, if anything, that looks like.
All right, Bloomberg's Jennifer Zabasajja in Johannesburg. Thank you. Well, Egypt has kept interest rates at a record high, opting for caution as US President Donald Trump's trade tariffs and controversial Gaza proposal stoke fresh economic uncertainty. The central bank maintained the deposit rate at 25.25% and the lending rate at 28.25%. That's the regulator's 7th consecutive hold. Joining us now is Ziad Daoud, Bloomberg Economics Chief Emerging Markets Economist. So, Ziad, what's the thinking behind this decision, and will they finally make a move this year?
Well, the thinking is simple. The Central Bank of Egypt has two inputs. First, it needs to keep a healthy gap between the interest rates they set and domestic inflation. And second, they need to maintain a healthy gap between their interest rates and global interest rates. And both of these factors, domestic inflation and global rates, explain why the central bank kept interest rates on hold this time around, but it's likely to cut rates significantly in 2025. If you think about domestic inflation, it's currently high, but merely the way it's calculated suggests that it's going to drop significantly after April because Egypt had a significant devaluation in March 2024, and the effect of this devaluation will drop out from year-on-year calculations of inflation. So inflation will come down. That will allow the central bank to cut rates. If you think about global interest rates, again, there's a disinflationary process happening around the world, probably slower rate than Egypt, and global central banks are still expected to cut interest rates, and that will give Egypt room to lower interest rates later this year. So both domestic inflation and global rates explain why the central bank kept interest rates on hold, but it's likely to cut rates significantly in 2025.
Well, the rate decision comes as Trump is looking to potentially relocate Palestinians from Gaza into Egypt, and he also threatened to cut aid to Cairo. So does he have significant economic leverage over Egypt?
Economic leverage? No. If you think about aid, it is less than 0.5% of GDP for Egypt. So it's not a significant amount that would force Egypt to take such a political risk by taking in Palestinians from Gaza. If you think about tariffs, and Trump did use tariff as a tool to pressure countries, well, you know what? Egypt runs a trade deficit with the U.S. It buys more stuff from the U.S. than it sells to the U.S. And in this environment, tariffs are less effective. And even if tariffs were imposed on Egyptian exports to the U.S., the total size of Egyptian exports to the U.S. is less than 1% of GDP. Egypt's exposure is small in that sense. So in terms of economic leverage, Trump doesn't have much over Egypt. Maybe he has other leverage, but not economic.
All right, Ziad Daoud, Bloomberg Economics Chief Emerging Markets Economist, thank you so much for joining us. All right, let's check in on how markets in Asia are faring. Avril Hong's in Singapore. Avril.
Yeah, Paul, we were talking about Japanese auto stocks, particularly Nissan earlier. The stocks just revved up. We're seeing this spike against the backdrop of reporting by the Financial Times that a group in Japan is drawing up plans for Tesla to invest in Nissan. And of course, Nissan has been in a lot of trouble recently, not able to turn things around. We heard in the past couple of months how Honda was exploring that tie-up, and then earlier this month, it was reportedly scrapped, that tie-up. So maybe Tesla can play a role here, and that's helping to boost Nissan stock. Meantime, the one stock that we've been watching today is Alibaba's. It's really wild, the levels you're seeing today, a 13% spike. And of course, it's already following on from a $110 billion market cap rally. Today's surge adds about $38 billion at least in market cap. And it was against the backdrop of investors waiting out for earnings, a key test, and indeed it delivered. So that's pulling not just Alibaba stock higher, but also the Hang Seng Tech. Now flip the board because I wanted to put things into further context for you. When you look at the Chinese tech gauge, it has doubled from the 2022 lows pretty much, but it's still really far away from the peaks of 2021. So keep that in mind even as we see the Chinese stock rally.
All right, Avril Hong in Singapore, thank you. Coming up, polls suggest that the party of Chancellor Olaf Scholz in Germany is on course for its worst result since World War II. We're live in Berlin for the latest on this weekend's German election. That's up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. 8 weeks after the Bundestag was dissolved, Germans finally vote this weekend following an election campaign which has failed to turn around the fortunes of Chancellor Olaf Scholz. Bloomberg's Oliver Crook is outside the Chancellery in Berlin for us. So, Oliver, set us up for us. What can we expect as Europe's biggest economy heads to the polls?
Yeah, Paul, I mean, listen, you say about 8 weeks since the government was dissolved, but this is a process that really began on November 5th, the same day that Donald Trump was elected president of the United States, when basically Olaf Scholz pulled the plug on his sort of fractious three-way coalition that paved the way to this election. And they probably won't even get another government in place till at least basically Easter. That would be a sort of accelerated timeline for this German government. And that is sort of at the heart of the issue here in Germany, where it's been feeling like for a number of years there's not enough that has been happening, not been happening fast enough. Setting up, going into the weekend on Sunday in the polls. What has been remarkable, Paul, is that basically since the beginning of this election process, the polls haven't moved a whole lot. We're still expecting the CDU, the center-right, to be the main party in Germany, getting about 30% of the vote, with the far-right, the AfD. They have been really a large protagonist in this political story in Germany over this election process, scoring likely 20%, second biggest party in Germany. It's first time for that to happen since the end of the Second World War. And really going into it, you look at the sort of historic averages of the parties that have led governments. Under Merkel, you know, she never got below 30%. Olaf Scholz was really sort of the only person to get below 30% since the turn of the century. Friedrich Merz is looking at 30% potentially to lead the next government. That would hopefully put him in a stronger position to basically get more things done. But again, it's all going to come down to what happens on voting day, because, Paul, there are a lot of people here in Germany that are still undecided going into Sunday.
Well, there's little chance of any party winning an absolute majority, so walk us through the coalition possibilities and as well as the timeline.
Yeah, so listen, Paul, I mean, it's always coalitions basically in Germany. There's been one absolute majority since the end of the Second World War. That only happened one time in history. So often what has happened is you have the center-right and the center-left, the CDU and the SPD, forming a grand coalition. That may be a little bit tougher this time around just because of how difficult and how sort of arduous and really sort of how aggressive this election campaign has been. But the reality of the situation is that Olaf Scholz's party, the SPD, is likely to get its worst outcome in the party's history, which will likely mean that Olaf Scholz would step out of the picture, thus paving a way potentially for the so-called Grand Coalition. That is the coalition between black and red, CDU and SPD. What we're also looking for is the potential that the CDU could team up with the Green Party. This is something that is going to be slightly harder to do in terms of the arithmetic, but senior CDU lawmakers that I have spoken to, though they're sort of ideologically a little bit further away from the Greens, a bit closer to the SPD, they think that on an interpersonal level, since there's been such a fractious sort of relationship between the CDU and the SPD, that could actually work out pretty well. But Paul, really the thing to watch out for on Sunday is not necessarily who's going to get the most votes, but who's going to get the least votes. Because if any party gets beneath 5%, as a couple parties may, they will drop out of the Bundestag, and that will fundamentally sort of rewrite the arithmetic of what coalitions will be possible.
All right, Bloomberg's Oliver Crook, thank you. Still to come, Nigeria's central bank holds its key interest rate. We're going to get more details on the inflation outlook next. This is Bloomberg.
This Sunday, Germany heads to the polls following the collapse of Chancellor Scholz's coalition. With the focus on the economy, migration, and geopolitical tensions, how will the German balance of power shift? Bloomberg Television has continuing coverage leading up to the election and will bring you the results after the votes are tallied with a special post-election broadcast. Tune in Sunday, starting at 5 p.m. London time. Only on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Nigeria's central bank has maintained its key interest rate at 27.5%. An overhaul of the data used to calculate inflation showed that it had significantly slowed. For more, Bloomberg's Ondero Oganga joins us now. So, Ondero, after aggressively hiking rates, the central banks decided to hold. Tell us about what led to the turnaround.
Hi, Paul. So all this comes down to satisfaction with the recent macroeconomic development. The central bank governor, Olayemi Cardoso, says that it seems as if confidence is gradually returning to the Nigerian market and the country is heading in the right direction, attributing part of this to the orthodox policies that they've been adopting and saying they're going to stay put. If we look at some of these indicators, starting with the currency, the naira was devalued in 2023, lost 70% of its value, but is beginning to stabilize. Since December, it has traded at 1,470 up to 1,550 to the dollar. And Standard Chartered Bank says that inflows have been supported by improved confidence amid structural reforms that are currently going on in Nigeria, better functioning of the FX market, and also reduced volatility between the naira and the dollar. If we also look at inflation, a steep decline to 24.5 from 34.8 after revision of how this data was calculated. And despite the fact that inflation is falling, the central bank says that it's still very aware of the risks that continue to persist. Food inflation is expected to continue outperforming non-food inflation. But then a Bloomberg economist says that this is going to be mitigated by the gains in the naira as the external position strengthens, energy prices soften, and hence by the end of the first half, we are likely to see inflation moderate in Nigeria.
So how's the market reacting and adjusting to the recent fiscal and monetary policy reforms?
Nigeria seems to be getting a positive nod from the market as this is happening. It's pushing stocks high and it's also pushing bond yields lower. If you look at their sovereign risk spread, it has fallen to the lowest since January of 2020. And it's going a long way in erasing the premiums that have been accumulated since the COVID-19 pandemic and the subsequent effects that it had on the economy. If we profile the NGX All-Share Index, it's up 11%, which is triple the rise of MSCI gauge for developing equities. Looking forward, the central bank is expected to stay put, according to Bloomberg economists, and they're projecting that a cut will only come in the third quarter of this year.
All right, thank you. Bloomberg's Ondero Oganga in Kigali, Rwanda. Now let's take a look at some of the other stories that we're following. The IMF is in Mozambique, pledging continued support on a visit to the southern African nation. Months of deadly protests shook the economy late last year in the wake of a disputed election in October, with the unrest hitting government revenue, compounding a growing debt problem. Mozambique's IMF program is scheduled to end in March, with a fifth review still pending. China and Korea have sent $4 million to Africa to help plug some of the immediate health funding gaps left by President Trump's freeze on various aid programs. Africa receives about 84% of its healthcare funding from outside the continent, of which the US had pledged to contribute $500 million. It's so far committed $385 million, leaving the Pan-African Public Health Agency with a large funding gap to fill. The US has sanctioned one of Rwanda's most powerful officials for his support in supporting the M23 rebel movement in neighbouring Democratic Republic of Congo. The US Treasury's Office of Foreign Assets Control says James Kabarebe, a Rwandan minister and former general, now orchestrates support for M23. Rwanda has denied backing the rebels or having troops in the country and says sanctions are unjustified. France says some security cooperation will be maintained with Ivory Coast, even as its soldiers start to withdraw. The two countries will continue to engage on training and equipment. France currently has about 400 troops in the West African nation at an army base that it's run for decades, more recently largely dedicated to fighting Islamist extremism groups in the Sahel region. All right, let's take a look at how we are tracking ahead of the Open in Europe. We've got futures looking a little bit softer at the moment, but not by much. It's been a kind of a mixed day of trading here in Asia as well. And we did see US markets a little softer heading into today, and S&P futures for the US also looking a little bit softer, but only by a few points there. We take a look at treasuries as well. We have seen yields pulling back a little bit this week. We've heard from a couple more Fed speakers Here's Alberto Musalem saying there's increased risk that inflation could stall above 2%. He sees policy in the US remaining restrictive for now. Raphael Bostic has acknowledged some greater uncertainty, but he still sees 2 more rate cuts this year. There's not a lot of change to the outlook there from the Fed. Take a look at oil as well. We have seen oil pulling back a little bit from its highs. Brent right now 76.33 a barrel, but we should still end this week with the biggest weekly gain that we've seen since January. All right. That's it for Horizons Middle East and Africa. I'm Paul Allen in Sydney. Stay with us for Daybreak Europe. This is Bloomberg.